Pricing can make or break your agency, but so many of you are using outdated strategies that's costing you profit and costing you clients. If you're stuck in endless negotiations, price is always an issue. At the end of the month, you feel like you're just not getting paid what you deserve for the work that you're delivering, you probably have a pricing issue. In this video, I'm going to dive deep into pricing agency services, the common methods, and why you might choose one over the other. By the end of it, you should understand the method that you need to use within your agency to unlock profit, to free you up of time, and to have a scalable business. My name is Rehan Moghul. I'm a chartered accountant, agency CFO, and founder of Sidekick Accounting. I've helped over 100 agencies make more money and pay less tax with strategies similar to what I'm going to show you in this video. Let's start off with the two most common pricing methods I see agencies using: cost plus and time-based. If you're in the agency space, you've probably used one of these methods at some point in your journey. Cost plus pricing is really straightforward. It's where you take the cost of delivering a piece of work through estimating hours and rates, and you apply a margin on top. That way you make sure you're covering your cost and you're making a fixed profit on top. That might sound great, but here's where it falls down. Cost plus pricing does not take into account the amount of value that you're delivering to a client. It actually penalizes you for delivering work more efficiently or for cheaper. You're essentially pricing based on what it costs you, which should go down over time, rather than what it's worth to a client, which should go up over time. For example, you might have sold a branding package to a client that significantly changes their market position. This is something you and your team do and have done every day for the last few years, and therefore you can do it with minimal effort and cost compared to your competitors. If you're only charging based on your costs with a small markup, you're undervaluing the work you deliver and you're cutting your margins short. Second most common model is time-based pricing. This does what it says on the tin. You're essentially charging your time out for a fixed hourly rate. Again, this one sounds logical because you're getting paid for your time, but you're actually shooting yourself in the foot. Your income is directly tied to the limited number of hours you have available to work, and the results that you achieve have zero impact on how much you would charge. So over time, as you become more experienced and efficient at delivering a great outcome, you're going to eventually start getting paid less and less because you're doing it quicker. Or you could find yourself in a situation where clients are questioning how long it's taken you to deliver a piece of work because they realize that you're incentivized to take longer. So while cost plus and time-based pricing feel familiar and logical, they often lead to pricing, positioning, and profitability issues. Cost plus can keep you in a price war with competitors who are willing to undercut, and time-based is going to penalize you for growing your business. Time-based can make it hard to scale because there's only so many hours in a day. If your pricing strategy is not tied to the value you deliver, we need to look at other options. This brings us on to the third method, which is value-based pricing. This flips the traditional pricing models on their head because instead of charging based on a cost or time, you're charging based on the impact and value that your product or service delivers to that client. This approach recognizes that your expertise, creativity, and results are worth far more than the sum of their costs or the time that it takes you to do that work. Let's say your agency develops a marketing strategy that adds £500,000 of revenue to your client's business every year. Charging them by the hour or based on the cost that you've incurred wouldn't capture the immense value that you've just added to their business. Without you, they would be £500,000 worse off. With the value pricing approach, you're aligning your pricing with the impact you have on your client's business. That can mean significantly higher fees for your agency that truly reflect the contribution that you've made. The next question is, how do you get started with value pricing? First, you need to deeply understand your client's pain points, their goals and desires, and what a successful outcome looks like for them. This means asking the right questions during the discovery phase. What challenges are they facing? What's a good outcome for them from the solution that you're able to provide? What does success mean for them in terms of business growth, cost savings, or other KPIs? Once you have this information, you can position your services as a solution to those problems rather than as a list of deliverables. A basic example is if you're redesigning a website for a client, don't position it as something where you're dealing with X number of pages or you're putting in X number of hours. Instead, position it as something that is directly linked to a business outcome. For example, a website that increases lead generation by X%. Doing this will directly tie your work to business results. Putting in place value pricing is not easy, otherwise every agency would be doing it and every agency would be super profitable. It requires a shift in mindset, not just for you, but also for your clients who may be more aligned with traditional pricing models. You'll need to clearly articulate what the outcome is as a result of your solution and what those outcomes are worth to your client's business. The amount that they are worth to the client business should be far greater than the investment they make into you. Your sales process has to back up the claims you're making with case studies, testimonials, and other assets that demonstrate you've achieved similar results for similar clients. And you might be wondering, what pricing model is right for me? The answer depends on a few factors: how mature your agency is, how long you've been in the market, what product or service you're selling, and what type of clients you're working with. If you're relatively new to the game, building out processes and systems and still trying to find your feet, cost plus pricing might be the way forward for you to ensure that you are always profitable. It's straightforward to calculate, and if you're scaling aggressively, it's a pricing method that is quick and easy. On the other hand, if your projects often vary in scope and change around a lot and you need flexibility, time-based pricing could be the best option for you. It's particularly useful when you're unable to predict upfront the amount of work required, like if you're selling consulting or you're working with clients who are always changing their mind. But for established agencies looking to optimize their pricing and make more profit, value pricing is a great way to differentiate yourself from your competition. It's especially powerful when you're delivering specific and measurable results. Now, at this point, it's important to remember that your pricing strategy doesn't have to be a one-size-fits-all approach. You can price certain products and services using value pricing, and then you can adopt time-based or cost-plus for other services. Most agencies will be using a blend of different pricing methods. Once you've chosen your pricing strategy, it comes down to implementation. Start by aligning your team. Everyone from sales to account managers needs to know the rationale behind why you price the way you do and how to articulate that to clients. Training here is essential. This is especially important if you're moving towards value-based pricing and away from the traditional way of thinking about price. Next, test your pricing method with clients. You don't have to move everyone all at once. Instead, pick a few projects to test the pricing on and gather feedback. Pay attention to how clients might react. Are they excited about this new approach where you're talking more about value? Or is there some sticking points that you need to work through? Use this feedback to refine your approach and always focus on value. Remember, you're no longer just providing a service, you're selling a solution that solves their biggest problems. Pricing your agency services for profit is about making sure you capture all of the value that you are delivering. Whether you're a startup working on a cost plus or time basis, or an established agency that's fully invested in value pricing, pricing is the biggest lever in your agency to unlock profit. Invest upfront to get it right, and you'll reap the rewards for years to come. If you found this video helpful, give it a thumbs up and click subscribe below for more agency finance content. Let me know in the comments how you price your services and any challenges you might be facing.